Jay-Z, the renowned rapper turned business mogul, has recently made headlines with a billion-dollar merger announcement that has caused waves throughout the investment world. His company, Marcy Ventures, merged with Pendulum Holdings, an investment firm led by former Obama advisor Robbie Robinson, creating a power-packed entity known as Marcy. This merger is being touted as a strategic alliance to boost black buying power and promote diversity, equity, and inclusion, DEI, within the business sector. On the surface, it seems like a monumental business move. However, a closer look at the timing, the lack of specific deal terms, and the way the merger is being presented raises important questions. Could this merger be more about shielding assets and protecting Jay-Z's financial interests than expanding his empire? Marcy Ventures, which was founded in 2018 by Jay-Z, Jay Brown, and Larry Marcus, has been a key player in the venture capital space, investing in promising early-stage companies. Some of its notable investments include Partake Foods, known for allergy-friendly snacks, and Savage X Fenty, Rihanna's inclusive lingerie line. Marcy, the merged entity, promises to continue investing in businesses with strong brand values and high customer satisfaction. The partnership with Pendulum Holdings, which is focused on diverse investments, brings a fresh perspective to the table. Pendulum Holdings was founded by Robbie and Dorita Robinson and boasts a portfolio of companies such as Fly by Jing, a spice brand, and Saltbox, a co-working warehouse provider. At first glance, the merger appears to be a typical power play, combining assets and strengthening both companies' positions in the market. The $1 billion valuation, prominently mentioned in the press release, suggests that Marcy could be a formidable force in the world of private equity. Additionally, the focus on diversity and inclusion, which is heavily emphasized in the merger's public announcement, positions Jay-Z's business ventures as champions of social good. These values are undoubtedly important, but the question arises, is this merger more than just a business move? Could it be a calculated attempt to shield Jay-Z's assets and protect him from potential legal troubles? Jay-Z's legal issues are well documented. He is currently facing a lawsuit from Tony Busby, a prominent attorney, and has been accused of engaging in actions similar to those of his peer, Sean Diddy Combs. While Jay-Z denies the allegations, the lawsuit remains unresolved, and he is fighting to have the case thrown out. In addition to this, Jay-Z's close association with Diddy has raised eyebrows, particularly as Diddy faces federal investigation. In times of legal scrutiny, it is not uncommon for powerful individuals to restructure their assets, shift ownership, or merge with other companies to create a layer of legal separation and shield themselves from potential liabilities. The timing of this merger, amid the ongoing lawsuit and legal heat surrounding Diddy, raises suspicions that the merger might be more about protecting Jay-Z's financial interests than expanding his business empire. The merger between Marcy Ventures and Pendulum Holdings could be viewed as a defensive move. By aligning himself with political allies like Robbie Robinson, who was an advisor to Barack Obama, Jay-Z might be seeking to insulate himself from any potential legal or regulatory challenges. Associating with respected figures in the political and financial worlds could provide a layer of credibility and buffer against any negative press or legal action. Furthermore, having a former Obama advisor on board could serve as a form of PR armor, signaling that any legal action against Jay-Z would be tantamount to targeting respected institutions. However, the merger's emphasis on diversity and inclusion, while undoubtedly beneficial, may also serve as a convenient deflection tactic. By focusing on these social values, Jay-Z can shift the public's attention away from his legal troubles and business dealings. The press release touts the merger as a victory for black buying power, but this narrative could be a clever ploy to distract from underlying financial vulnerabilities. By framing the merger in terms of social good, Jay-Z may be attempting to protect his assets under the guise of promoting diversity. One of the most glaring issues with the merger announcement is the lack of specific deal terms. While the $1 billion asset value is repeatedly mentioned, there is no concrete breakdown of how much equity was exchanged or capital injected into the merger. In private equity, The absence of detailed terms is often a red flag, as it can indicate uneven stakes or hidden urgency to complete the merger without fully disclosing the details. Furthermore, Jay-Z's absence from the public announcement, particularly from a personal statement that would typically accompany such a major deal, is curious. His silence could suggest that he is distancing himself from the merger or downplaying its significance, which only raises further questions about the true nature of the deal. Another potential red flag is the focus on DEI language, which has become a buzzword in the business world. While promoting diversity, equity, and inclusion is undoubtedly important, it is not uncommon for companies to use this language as a smokescreen to divert attention away from financial or legal issues. The merger's heavy emphasis on DEI could be a strategic move to present a positive narrative that aligns with current social trends while masking any underlying financial or legal concerns. By presenting the merger as a socially responsible initiative, Jay-Z and his partners can bolster their image and avoid scrutiny. The possibility of asset shielding is also something to consider. As with any major business deal, there is a need to watch for shifts in assets or changes in the structure of the newly formed entity. If Marcy starts rebranding investments or dividing its portfolio in the coming months, it could be a sign that Jay-Z is preparing to shield his assets from potential legal costs or fines. Similarly, if there are sudden liquidations or quiet sell-offs of smaller companies within Marcy's portfolio, it could indicate that the company is preparing for financial or legal fallout. These are signs that need to be monitored closely to assess whether the merger is truly about business expansion or if it is a strategic move to protect Jay-Z's financial interests. Finally, it is essential to pay attention to political figures who may speak out in support of Jay-Z during this time. If prominent individuals publicly defend him or downplay the investigation into his business dealings, it could signal that the merger is not just a business move, but a form of survival. Such public support could further insulate Jay-Z from the pressures of the legal challenges he is facing. In conclusion, while the merger between Marcy Ventures and Pendulum Holdings may seem like a strategic move to strengthen Jay-Z's position in the business world, there are significant concerns that suggest it could be more about asset protection than expansion. The timing of the merger, the lack of specific deal terms, the emphasis on DEI language, and the possibility of asset shielding all point to the idea that Jay-Z is using this merger as a defensive tactic in response to his legal troubles. The merger with Pendulum Holdings, coupled with the involvement of political figures like Robbie Robinson, could be a strategic attempt to insulate Jay-Z from any potential legal or regulatory fallout. Whether or not this merger will ultimately prove to be a successful move for Jay-Z remains to be seen, but it is clear that the underlying motivations for the deal are more complex than they may initially appear. As time unfolds, it will be crucial to watch for any changes in Marcy's portfolio and any signs of asset reallocation, as these could reveal the true intentions behind this high-profile merger.